Most people think wealth is about earning more money. In reality, wealth is about where money is protected, how fast it moves, and how efficiently it's structured. In this episode, I break down 3 of the most precise systems in the global economy: Switzerland, Hong Kong, and Netherlands. These places don't chase wealth. They build infrastructure that global capital depends on. Switzerland protects capital through neutrality, trust, and financial stability. Hong Kong accelerates capital as one of the fastest financial gateways in the world. The Netherlands quietly optimizes trillions through tax engineering, logistics, and corporate structures. This is not a travel video. This is not lifestyle content. This is an explanation of how modern wealth actually works. In just 14 minutes, you'll understand why Switzerland became the ultimate wealth preservation system, how Hong Kong turned speed and access into economic power, why the Netherlands looks modest but controls massive capital flows, the difference between protection, movement, and optimization, why money follows systems, not effort. These systems were not designed for people. They were designed for capital, and if you don't understand how capital moves through them, you will always be working inside someone else's structure. Watch until the end and tell me in the comments, which function matters most today: protection, speed, or optimization? Subscribe for deep dives into global cities, economic models, and the real infrastructure of wealth. Because skylines impress. Hello friends! My name is Gianna, and today we're going to talk about how money actually works in 3 of the most interesting countries from the perspective of the financial system: Switzerland, Hong Kong, and the Netherlands. Why these countries? Because they are true financial centers where money operates according to its own unique rules. And we're not going to focus on how they earn money, but rather on where it feels most comfortable. Do you know the paradox of global finance? The world is divided by borders, but capital hates these borders. Money flows to places where it is safe, convenient, and profitable. And there are 3 countries that have been the main magnets for capital for decades. These are Switzerland, Hong Kong, and the Netherlands. But here's the question: why do oligarchs from all over the world still keep their money in Switzerland when the country's banking secrecy is no longer the same? How does Hong Kong manage to remain the financial capital of Asia while being part of communist China? And why do huge corporations choose to establish their headquarters in tiny countries? The Netherlands? For most people, Swiss bank is synonymous with reliability. Do you know where this myth came from? In fact, this is not exactly a myth, it is a historically built system. The secret of Switzerland's success lies in 3 things. First, political neutrality. While the whole of Europe was fighting in the First and Second World Wars, Switzerland stood on the sidelines. The only thing they violated was their neutrality in money storage. Capital flowed to them from all over war-torn Europe. This became the foundation. Secondly, there was the banking secrecy. In 1934, they passed a law that made it a criminal offense to disclose information about a client. This made Switzerland a haven for those who wanted to keep their savings private. To this day, Switzerland is still home to numerous bunkers in the mountains, where not only gold bars are stored, but also works of art and even archives. But let's face it, today's Switzerland is no longer the money-grubbing black hole it was 50 years ago back. Under pressure from the United States and the EU, they lost their positions. Banking secrecy is almost dead for foreigners. They exchange information with the tax authorities of other countries. Nevertheless, Swiss banks still have trillions of dollars in assets under management. According to the Boston Consulting Group, Switzerland ranks first in the world in terms of foreign assets held. About a trillion. How did it happen? Why didn't the money go away? Because they switched from secrecy to risk protection. The Swiss franc is one of the most stable currencies in the world. There is almost no inflation. Plus, the stability of the legal system even. When Credit Suisse collapsed, which was one of the systemically important banks, the government quickly merged it with UBS to prevent the collapse of the System. The government said, "We don't leave our own behind, even if the bankers have messed up." Conclusion on Switzerland. Now money is brought to Switzerland not to hide, but to preserve. This is the conservatory of the financial world. It is boring, reliable, and expensive. Taxes here are relatively low. Corporate tax can be from 12 to 21%, depending on the canton, but you will not make any special miracles of tax optimization anymore. This is a safe, not a machine for printing money. Switzerland is a country where money works for stability and security, but this does not mean that it is easy to hide your finances here. Today, Switzerland is a transparent and reliable financial system. Now let's move to Hong Kong, a city that has become a financial bridge between East and West. It combines Chinese economic power with Western financial standards. The Hong Kong dollar and its pegging to the US dollar. The Hong Kong dollar is pegged to the US dollar at a rate of 7.75 to 7.85 HKD per USD. This makes the currency highly stable and attractive to investors. The Hong Kong Monetary Authority HKMA strictly controls this exchange rate. Low taxes and a free economy. Hong Kong is one of the freest economies in the world. There is no VAT. The corporate income tax is very low, only 16.5%, and personal taxes are even lower. This makes Hong Kong an attractive destination for businesses and investors. Hong Kong Stock Exchange, one of the largest in the world. The Hong Kong Stock Exchange, HKEX, is the third largest stock exchange in Asia and one of the largest in the world. Shares of Chinese companies such as Alibaba, Tencent, and other giants are traded here. An offshore center for Chinese capital. Many Chinese companies use Hong Kong as a platform for entering international markets. It is easier to attract foreign investment and work with Western partners here. Hong Kong is a unique place where Eastern and Western financial traditions are combined. Money works quickly, efficiently, and with minimal taxes here. Hong Kong is the gate to Asia and the dollar harbor. From conservative Europe, we have moved to Asia. Hong Kong is the complete opposite of Switzerland. If Switzerland is a quiet pond, then Hong Kong is a financial hurricane. Hong Kong has a unique status. It is a special administrative region of China, but with its own currency, its own legal system based on English common law, and extensive autonomy until 24/7. So, on the one hand, you have access to the Chinese market, and on the other hand, you work according to clear international rules. But the main feature of Hong Kong is its dollar. The Hong Kong dollar is tightly pegged to the US dollar. The exchange rate has been maintained at 7.75到7.85 HKD per USD for many years. How does it work? If the exchange rate drops too low, the Hong Kong Monetary Authority HKMA simply buys up its own dollars to support demand. If it's too high, they sell it. They have huge foreign exchange reserves, one of the largest in the world. Relative to the size of the economy, this gives investors a superpower. You don't have any currency risks. You can invest in Asian assets without worrying about exchange rate fluctuations, like with the Thai baht. The second point is accessibility. It takes only 1 to 3 days to register a company in Hong Kong. There is no VAT, no capital gains tax, and no dividend tax, but there is a nuance. Due to the fact that Hong Kong has historically been a gray offshore zone, local banks are now conducting strict compliance checks. Opening an account there has become more difficult than in London. They are afraid of dirty money because regulators around the world are keeping a close eye on them. And another important trend, Hong Kong and Singapore are two tigers that are always competing for capital. But while Singapore is a strict English boarding school for millionaires, Hong Kong is a faster and more flexible tool. Now, Hong Kong is actively attracting family offices and becoming a hub for private capital, especially as the Asian economy grows. Money in Hong Kong is working aggressively. It's not just about keeping money under the mattress, it's about investing in China and Southeast Asia. Taxes are low, speed is high, But the requirements for clean money are constantly increasing. And finally, the Netherlands. If you think Holland is just tulips and cheese, you're mistaken. It has one of the smartest financial systems in the world. What is the secret of the Netherlands? It is not a country, but a giant logistics and financial hub. The Amsterdam Stock Exchange is the oldest in the world, dating back more than 400 years. But the main reason corporations love the Netherlands is its tax structure. It has a huge network of double taxation avoidance agreements. The famous Dutch sandwich is a scheme used by Google, Starbucks, and other giants to optimize their taxes. Officially, this is now being combated. But the infrastructure remains that the Netherlands loves innovation. There are powerful incentives for R&D here. If you spend money on research and development, you can receive a tax rebate on the salaries of your development staff, WBSO, of up to 40 to 50%. There are also incentives for investing in energy efficient and environmentally friendly equipment. In other words, the government is saying to businesses, develop technology and save the planet, and we will pay part of your taxes. The banking sector in the Netherlands is huge. It is 3 times larger than the rest of the country's economy. The 3 main players, ING, ABN AMRO, and Rabobank, hold 85% of all assets. This means that the system is highly concentrated and closely linked to the state. The Netherlands is also actively looking to the future. Its central bank, DNB, is seriously researching digital currencies and blockchain. At the same time, they are cracking down on money laundering. For example, they require all crypto providers to register. Conclusion on the Netherlands. Money flows into the Netherlands through large corporations. It is a country for headquarters, holding companies, and trading houses. If you want to run a global business in Europe with minimal cost and convenient access to credit resources, you go to the Netherlands. So let's sum up. We have looked at 3 completely different models. 1, Switzerland is a bunker. Money is brought here to save it from political turmoil and inflation. 2, Hong Kong is a bridge. It is used to storm Asian markets, using the dollar as an anchor of stability. 3, the Netherlands is a headquarters. Here, money is given a legal appearance and passed through the European market with clever tax optimization. Understanding how money works in these countries gives us the key to understanding the entire global economy, because global capital has no homeland, but it always chooses the best home. These 3 examples perfectly illustrate different paths to wealth. Through neutrality and quality, Switzerland; through trade geography, the Netherlands; and through radical economic freedom, Hong Kong. 1. Switzerland, an island of stability and precision. Switzerland is a classic example of how a lack of resources can be compensated for by institutions. Trade. 2. Hong Kong, radical freedom and a bridge to China. Hong Kong became wealthy thanks to its minimal state model. 3. The Netherlands, masters of logistics and early capitalism. The Netherlands' wealth has historically grown out of water and trade. All 3 cases are united by low levels of corruption, openness to the world, and a focus on the service sector, 70 to 90% of GDP. They did not try to do everything themselves, but found their unique niche in world trade. Immigrant Invest 1. Which of these models do you think is more sustainable in today's unstable world? Switzerland's closed and high quality, or Hong Kong's ultra-fast trade? Thank you for watching until the end. I spend a lot of time researching how cities and countries actually build wealth, not the surface-level stories, but the systems underneath. If this video helped you see global money, power, and infrastructure a little more clearly, then it was worth making. This channel isn't about travel or lifestyle. It's about understanding how the world really works, quietly, structurally, and often invisibly. If you enjoy this kind of analysis and want more episodes like this about global cities, economic models, and the architecture of wealth, consider subscribing. More countries and deeper breakdowns are coming. And if you have thoughts or disagree with my conclusions, leave a comment. That's where the real discussion starts. Thank you for being here.